LIC Dhan Varsha insurance plan. Will this insurance policy provide financial safety to your family in the case of your unfortunate absence? And will it also help you attain your financial goals by acting as your investment? Is this really a good addition to your investment portfolio? Let us see all of this in detail in this video. Hi, welcome to holisticinvestment.in. We guide individual investors like you to take the right financial and investment decisions to reach your financial goals faster and smarter. LIC has launched a single premium plan called Dhan Varsha. In this video, through a thorough analysis, we will be able to find out if this plan is a good endowment plan which will yield a better return on investment in the long run. LIC Dhan Varsha insurance plan is a non-linked participating individual life insurance savings plan. It is a single premium policy. In this video, we are going to see its features, benefits, advantages, disadvantages, its IRR analysis, and comparing it with other investment choices, and finally, is it wise to invest in this policy or not? Now let us go into the video. Now let us see the features of this insurance policy. You have options to choose your sum assured on death. In option 1, you get 1.25 times your tabular premium, and in option 2, you get 10 times your tabular premium. You also have the option to choose your policy term. Whether it's 10 years or 15 years, it's up to you to choose. The guaranteed additions shall accrue at the end of each of your policy year throughout your policy term. The premiums shall also be paid on the age at entry of the life assured policy term and the option chosen based on that. Guaranteed additions shall vary as per the chosen option of your policy term and the basic sum assured. Now let us see what is the advantages that's in store for you if you choose to invest in this plan. There are obviously options to choose your policy term and plan option at your own convenience. There is a hassle-free investment option, that is one-time premium payment. You can claim benefits such as maturity and death benefits which are also guaranteed. There is also a loan facility available for you. The rider option is there if you want to enhance your life cover. And what are disadvantages, and if you want to know, it's that the life cover they are providing is not adequate, and the return on your investment cannot come back the inflation rate in the long run, and locking funds for a longer period of time which has a low return like this policy might end up compromising your financial goals in the future. So as we have covered all the important information we need to know about the LIC Dhan Varsha plan, now we need to understand if this piece of information will be sufficient enough for you to decide whether to opt for this policy or not. No, you need to understand what kind of return you can get from this policy, because whenever you try to invest in any investment choices, it's important to know what you're going to get from this policy, because at the end the return is what's going to matter. So now based on LIC's website, we have taken the benefit illustration for this policy. So based on that, we are going to determine the IRR of this policy. So first we are going to assume some things to calculate the IRR. For example, the policyholder's age is 30 years and the policy term he's going to take is for 15 years. So if we opt option 1, the basic sum assured is going to be 10 lakhs and the sum assured on death will be 11 lakhs 8,483 rupees. But the single premium he is going to pay is 8 lakhs 86,750. And if he's going to opt for the option 2, the basic sum assured will be 10 lakhs and the sum assured will differ because it's going to be 79 lakhs 87,000 and the single premium will be 7 lakhs 98,700. So under this option, we have to understand if you choose option 1, your sum assured on death will be 1.25 times of your tabular premium. But if you choose option 2, your sum assured will be 10 times the tabular premium as you have previously discussed. So at the end, option 1 gets a premium IRR of 6% and option 2 gets an IRR of 4.74%. So both the IRR provided in this plan option are lower than any bank's FD rate of interest. So these returns cannot combat the inflation rate in the long run. So any investment will be beneficial for an investment only if it generates the returns above the inflation return, which this policy is not providing us. So now let us look at other investment options to see how it fares. Now it is time to compare it with other investment options to assist you in taking the right financial decision. So let us assume the cash flow similar to that of the second option under the LIC Dhan Varsha plan. The same single premium is invested in a pure term insurance for life coverage, single pay, and the balance amount can be invested for wealth accumulation purposes. So the assumptions we are going to use for comparing LIC Dhan Varsha versus pure term insurance plus ELSS combination is the sum assured on death, if you choose to invest in a pure term insurance policy, is 1 crore, and the policy term is same as LIC Dhan Varsha plan, 15 years, and the premium you are only going to pay it one time, single pay, 1,40,000, and the balance amount will be invested in ELSS mutual fund, which is 6,58,700. So at the end of 15 years, we are going to get 33,20,000. Compared to LIC Dhan Varsha plan's actual amount we get, this is higher than that, and the IRR we get is 9.97%, and this is also a post-tax return. After all the tax we pay, the post-tax return which we get is 9.97%. So this return is something which can combat inflation in the long run. Also, you get a life cover for 1 crore by investing in this combination compared to LIC Dhan Varsha plan. So it is evident from this investment point of view that LIC Dhan Varsha plan is not favorable to the investor as a long-term investment. So still wondering if you should invest in it or not? Let us see what are our final thoughts. So our final thoughts based on the plan options available is neither you can get a higher coverage nor you can get a larger maturity benefit from this insurance policy. In the end, you're forced to compromise with one to get the other benefit. The potential return we might get from this policy won't beat inflation consistently. So it fails to provide you with the time value of your money. So if you want to yield a better return, it's better to invest in a plan or a scheme where it can combat inflation in the long run. Also, choose an investment vehicle based on your risk appetite and time horizon. And if you have any doubts regarding that, you can always consult with your financial planner before taking any investment decisions. So it's a complete no from me for this policy. It's better to avoid this policy than add this to your investment portfolio. And if you still want to read more of an in-depth analysis of this insurance policy, there is a blog post about it in our website, which you can find the link in the description. If you have any doubts regarding the topic we have discussed in this video, please comment so we can get back to your queries quickly. Also, if you have any doubts regarding mutual funds or any insurance policy in general, then you can always book a complimentary financial consultation with one of our financial planners to discuss about it, and the link is in the description to book your appointment with us. And if you want to gain more knowledge regarding financial investments and personal finance in general, we also regularly conduct live webinars for which also you can register by clicking the link in the description. Also, if you like our content, please like, share and subscribe to our YouTube channel. Thank you.